everyone, welcome to FinTech Diary. My name is Amol Dete and my guest for this chapter is Deepak Jain, the co-founder of Flexi Loans. Deepak, glad to have you.
Thank you, Amol.
So to begin with, I know you are into lending business. Digital lending is quite a glamorous world these days because the financial institutions or banks, kind of fails to cater to the SMEs or entrepreneur segment specifically, or even the retail investors where FinTech actually got into the picture. Now, you have been operating in this space since really long. I would like you to tell us how has been your experience specifically financing the SMEs? How have you built your book? What kind of losses did you, manage to make, and also what kind of business did you make? What are your major learnings specifically, in the lending business that you are in?
Thanks, Amol. Let me start. So, Flexi Loans is a lending first fintech platform. And we've been in the business of providing working capital loans to small entrepreneurs across the country with a single office in Mumbai. With one office in Mumbai with no feet on street and 100% digital sourcing, we've been able to give loans in almost 25,000 pin codes till date. We have disbursed more than almost 3,000 odd crores till date. We are already clocking the annualized run rate of 2,000 odd crores in disbursement. So, for example, just giving a perspective that what we've been able to deliver in last 6 years, will deliver more than that in this financial year alone. Now, why this is happening? A lot of network effects we built for small entrepreneurs, or like digitizing the journeys for small entrepreneurs, started kicking in, post-COVID. And as more and more entrepreneurs go digital, more and more the digital adoption rates or UPI penetration rates increases, e-commerce penetration rate increases, businesses like ours will flourish, and it's just going to go only one way from here.
Okay.
On your second part of the question, on how our top line or our credit costs, etc., have been, the experience have been again very, very measured for us. You said that lending is very glamorous. We internally tell people that lending is not glamorous, lending is boring. You have to ensure that you are extremely disciplined as a lender.
Absolutely.
For us, we act upon EWSs and early warning, signals and what cohort data are reflecting every quarter in a very, very disciplined approach.
Right.
Basis that we take decisions to cut funnel, even though it may have some impact on our business growth.
Right.
So growth is important. Compounding growth, what we call the whole tech part of our business, but fin part is our underwriting and collections. We don't let go of that, and this has resulted in our credit cost being one of the best in the industry. In last 2 years, like the COVID impacted years, FY21 and FY22, our credit cost was up 5%.
Okay.
Which is by far one of the best in the unsecured loan market. In fact, these are comparable to some of the secured players who went public as well recently.
Right.
All of this, the operating leverage kicking in, has also resulted in phenomenal profitability growth for us.
Okay.
This time, I'll say this first time publicly, we've been churning out PAT for last 4 months consistently.
Oh, that's quite interesting, because that was my obvious and immediate question after this. Glad that you told us that you're profitable. Sounds really good, because not many fintechs have been managing to make money out of that. But when you say your credit cost is lowest in the industry, how did you actually manage the balance between one, generating profit, keeping the credit cost low, and also disbursing it seamlessly?
Sure.
How did you build this business model?
So the way Flexi Loans started was, we started lending to entrepreneurs in a B2B2B approach, what's now called the embedded finance lending. We are the market leaders in embedded finance lending across the country. Almost all top ecosystems in the country which are enabling SME loans for their platforms, on their platforms, we are the most preferred lenders there. So we're there with 90% of all the e-commerce platforms.
Right.
If you see the sellers getting financing there, Flexi Loans is the biggest lending partner for majority of the e-commerce platform. Almost all top payments ecosystem, the POS machine ecosystem, as well as the QR code ecosystem, when they are doing lending, Flexi Loans is empowering that lending on majority of these platforms as well. Similarly for the food tech, similarly for the farm tech ecosystem. So all these ecosystems, when they are providing lending, we are the largest lenders. Similarly, Meta recently announced
Yes.
that they are doing lending in almost 19,000
Yes.
pin codes.
Yes.
That's the pin codes we are servicing for them.
Okay.
So again, we are a very large lending partner for those kind of players as well. So that's
Right.
our first model of origination. Second, we also started doing supply chain financing pretty early back in 2018, and today we've catered to corporates from large corporate in the old economy world, or in the traditional economy world where they are PAT positive, etc., etc., AAA rated corporates, to corporates in the new age economy. So almost all large emerging platforms, which are to some extent ignored by some of the larger banks and NBFCs for supply chain program, but they are extremely well funded by private equity funds.
Right.
We go and provide supply chain financing solutions to them also. So we've been solving problems for many large CFOs for working capital solutions. And again, the way we are preferred partners for this embedded finance platform, we are the preferred partners for many large CFOs because we actually go on the table and solve some problems for the CFOs in their supply chain financing. And last but not the least, we have created our own digital marketing led origination channel. Again, it's massive. Our brand recall, we realize, is pretty high because our brand name comes so many times or hits this retailer or online seller so many times, right? Because all the top e-commerce players show them our brand, all the top payments players show them our brand, and when we reach out to them via Google, Facebook, that also. Okay. Now, all of this combined, what it does is our sourcing is extremely diversified.
Right.
Our average ticket size is 5 lakhs. So our loans are extremely granular and diversified. Our loans are 30% in North, 30% in West, 30% in South. Again, well diversified. Our sectoral coverage is not put on any single sector. No sector is more than 10-15% of overall portfolio. So again, sectorally diversified. And similarly, online versus offline diversified, right? So there's a balanced mix of digital-led platform as well as pure offline platforms for us. All of this resulted in the lending 101 of diversification being there, and thus resulted in extremely low credit costs. Long answer to the whole credit cost thing, but this is one reason why our credit costs have been very, very low. Second is what I covered in the previous part, right? That being very disciplined in cutting the funnels which are not working well, because as a new age lender, you need to experiment. You need to go to newer segments which traditional banks and NBFCs will not. But you have to be extremely agile to stop experiments which are not working.
Okay.
And disciplined on that approach as well.
So quite meaningful, Deepak. I'm glad to know that people recognize Flexi Loan as a brand. But when it comes to the lending business, obviously collection matters the most, right? Absolutely. And that's in fact the core. So how flexible Flexi Loan is when it comes to the collection, how strong that system is, what kind of NPAs do you have, and what kind of defaults have you witnessed in all these years?
So let me start first with the whole philosophy of collections for us. So as a firm, we believe that majority of these retailers, if their financial conditions are good, they would want to pay back. And that's the strong belief which we have as management at our end. And what we've done is we've invested a lot in collection tech, again, starting from back in 2017. So when people were only focusing on only focusing on origination tech or underwriting tech, we started investing in our own collection tech significantly. And I can thumb the table and say that our collection tech is as good as any other pure collection tech player you would see out there.
Okay.
Yeah. So this includes reminding the customers in proper manner, nudging the customers in proper manner, so that they ensure or helping them be disciplined in their EMI payments, and educating them at the same time that if you don't pay EMIs on time,
right,
your ability to borrow again from financial institutions will go down, and thus sometimes when you need to borrow in a rising cycle of working capital and you're increasing sales, you'll not be able to borrow, and thus please pay the EMIs, because ours is a comparatively smaller loan, right? So that's first part of the collection tech. Second, almost in all these pin codes where we operate in, we have ability to knock on the doors of the customers. We don't operate into cities or channels where we can't go physically and collect. This is not our people. These are agency network which are well trained on collection. We obviously keep reviewing and auditing their things. so that they are following the right collection practices as well.
Okay.
Yeah. So that's second piece, which is very critical. That as a DNA, what's the firm stands for. I follow Mr. Kotak very well in this. The DNA which we also want to set up is that Flexi loans will at least come and try their best to recover their funds. They'll not let the money go.
Right.
So again, it's very critical, which many fintechs don't
Right.
follow. I think so. Most of us should do that.
Okay.
At least make your effort so that entrepreneurs in that vicinity know that they'll not let it go. And then
So all these pin codes where you have been disbursing, you are saying that you have a network of your agents who can actually go and collect the money if needed.
Absolutely.
Oh, that's quite interesting. For which you must have partnered with all these external agencies which operate from your headquarters.
Absolutely.
So this is really a news to me that you don't have any other office but only one.
We have collection offices in two.
But those are pure collection offices.
Those are like only hub and spoke model, where they will manage the agencies in that local area. It's better that way. And yeah, so plus see 100%.
But did you face any defaults? What was the percentage of it?
So obviously we face defaults, but that's without defaults you're not in the business of lending, right? You're in the business of taking risk. You have to take measured risks.
Yes.
Yeah. So our current GNP are sub 2%. Yeah. And even in the COVID times, it was sub 4% for us.
Okay.
So again, the numbers have not gone too high for us ever, and the reason is being this diversified, being extremely disciplined in this.
Oh, fair enough. So now moving ahead, when you specifically speak about the business models, I'm sure you will have lots of partnerships with the banks or the NBFCs, right? Because you cannot directly lend from your own book, and most of the fintechs are operating as a loan originator or a aggregator. How are these partnerships, and what kind of percentage do you make specifically when you actually originate a loan for a bank or maybe NBFC?
Sure. So on that first, we always kept a single company, which is a RBI regulated entity in Flexi loans, NBFC. And through this NBFC only, we will partner with other banks or NBFCs and either co-lend with them in a 80-20 mode, or lend for them via the BC model. Yeah. So where 100% is on the books of the bank. The banks follow their credit checks. They follow their KYC checks, etc. We have to ensure that we get them all the documents which they need for the same. Yeah, so that's our role primarily in that thing. So end-to-end customer management is what we manage and we focus upon. We have line worth a few $1 billion available from these large banks and NBFCs, which we can utilize over next 2 to 3 years. Obviously, in this model.
The line of credit, which
we can co-lend or lend via BC model. So thus, what this has done is the supply of money is not an issue. We just have to now focus upon right demand or right quality demand. Yeah, and also help these large banks and NBFCs to reach to tier 2, tier 3 towns, which is a prime agenda of the government of India and RBI as well, right? So can you really enable the lending for extremely small entrepreneurs in every nook and corner of this country? That's what we are trying to do. It's reflected in our numbers. Almost 68% of our loans are in tier 2, tier 3 town, with one office in Mumbai. So again, a lot of corollary exists. Almost 60% of our customers, we are the first business loan lenders. They may have a home loan, they may have a credit card, but they didn't have a business loan. Flexi Loans was the first one to go there and give them a business loan. Again, these are some metrics we're extremely proud of. Almost 25% of our customers are women entrepreneurs. Again, a metric we are super proud of and we keep a tab upon. But some of these things are intangible things, which as an entrepreneur gives you a mission that this is the impact as a firm all of us are creating.
Right.
And every employee in the company stands by this impact. Every employee in the company thinks that this is the larger impact on the country and the economy which they are creating through it.
Give me some sense on the SME market in the India, because that's one of the growing story when we speak specifically about the SMEs and MSMEs, because the large bucket or the number of corporates specifically in the big bucket where you call them as a large corporates will be very less. And we have a number of SMEs and MSMEs, and the focus of the financial institutions is also increasing in this space. Now, since you're operating in this space, what I learned is everyone says this is a big space to be catered. India is a credit hungry country and there are billions of SMEs who actually needs credit. What is your learning? Is really demand high on that side? if that is the truth, then why banks are not actually opening their branches and catering to the SMEs? This is because of the manpower issues. So what are basic learnings that you have specifically on the demands of SMEs?
Again, very good question. Amol, see, the market is immense. As per various studies, the number of MSMEs or SMEs, what's been defined as per the definition, are anywhere between 60 to 100 million in the country. Now, some studies say 60, some studies say 80, some studies say 100 million. No matter what parameter you pick, it's a massive market. 80% of this is actually your micro entrepreneurs. These are mom and pop retail stores. Yes. When you just walk out of this road and you see a kirana store or an accessory store or a general market or a small sari ka dukan or a small kurti salwar shop in Jodhpur or somewhere in Bellary, etc. Those are the kind of stores or extremely micro entrepreneurs we are catering to. Similarly, there are microcosms of traders or small manufacturers based out of industrial belts across the country. Again, these are extremely small entrepreneurs. When I say small entrepreneurs, obviously they are not like for this family, they are the largest income earners, right? So thus their business is big for them particularly, but relatively when you look from the market, it's a small entrepreneur. All of this combined is a very big market, but the reason banks don't cater to them is getting documents from them is very, very bulky, and it requires a lot if you're sourcing physically. Unit economics point of view, it's better to source larger ticket loans when you are doing a branch versus doing the smaller ticket size. So thus nobody wants to spend technology or physical unit economics on these kind of segments. Thus this market is the prime sourcing channel for almost all large money lenders in the country. I'm born to a jeweler and a money lender. I've seen this as I grew up, that many small entrepreneurs will come, they'll give one currency, a gold, and borrow the another currency, which is cash, and pay sometimes upwards of 3% per month. So that's how the markets operate. Now I know of the stories from many local chit funds, etc., which charge 4%, 5%,
and more than that, and every month they charge.
Every month. Their ex-IRR, because they pick up cash daily, go as high as 80, 90%.
So the whole difference is based on looking at their cash flow and then lending it against that.
Absolutely. Okay. So what we are trying to do is, what was done by these chit funds and money lenders through physical approach, we are trying to do that digitally. For example, when we tie up with a payments ecosystem, we try and get our monies daily via the POS machine, direct debits to that POS machine. So we are trying to do that digitally, and in all of this mechanism, we end up obviously formalizing this entrepreneurs, because we are bringing them into the formal channels of borrowing. Reduce their cost of funds significantly, because our rates will be 50% lower than the informal channels for sure, and eventually create a positive impact on their earnings and their ability to generate employment and all those things. So those are the 2-3 things.
No, sure.
And thus we are acquiring customers not from banks and NBFCs, we are acquiring customers from these informal markets.
Right. No, that's quite interesting, Deepak. So now tell me something, most of the fintechs actually diverted their mind to the lending business because they realized they cannot make money into the payment, and lending is the only business where they can make money. So you have seen a great rally specifically into fintech operating into lending space. In fact, every fintech today is, either in lending space or maybe trying to do something different apart from this. And that is also one of the reasons the regulator looking at it very, very seriously. And we looked at these regulations which the RBI has imposed or maybe brought into the picture very, very recently. What I see from the fintechs, what my observation is, fintechs are kind of scared. Most of the fintechs, they do not know how the REs or specifically the regulated entities like banks or NBFCs will try to squeeze them, try to put a lot of pressure on them. Do you see a major difference henceforth after these guidelines came into the picture in the digital lending space? Do you think that the fintechs will operate with the same liberty that they used to operate earlier?
So let me answer it in a slightly different manner to this question. There is a thing called law, and there is another thing called spirit of the law. If you look at the regulations which came in and you understand the spirit of the law, the spirit of the law was always very clear, right? If you are in business of lending, please apply for a regulated NBFC license. If you are more than 50% of the income will come from lending, which majority is coming for most of these payments based fintechs, please apply for a lending license and become a lender.
Hmm.
Because as a lender, you are supposed to follow many monthly, quarterly compliances via which RBI can keep a check that whether you're following all the practices or not,
Yes.
which as a lender you're supposed to follow. Now, what was happening is because the non-core, non-lending businesses were not as profitable, everybody realized that okay, lending is where you can generate money by obviously creating a positive impact on the economy as well. But you cannot do that without following the guidelines which RBI had hitherto always told
Yes.
for lenders to follow. So as I said, at the start of our meeting as well, for Flexi loans per se, there is absolutely very low impact because we've been following all the guidelines because we are a regulated entity from the beginning.
Right.
Yeah. Many other fintechs were not following, let me not say that they were not following or not following. If they were not following it,
Right.
they will have to start following it. Now, can it be built in your unit economics? Absolutely yes. As a regulated entity, first, learning the lending business is not easy. It requires learnings of many cycles.
Yes.
Right? Why does RBI regulate? Because they know that in down cycles, if the credit business is done right, you may come down under, and if you have like if you have deposits from people or you have public investor money, etc., the whole country may have some impact, and thus they have regulations. So thus, as a regulated entity, you follow those compliances from the beginning, and learn the hard way of bringing a unit economics making sense, right? At Flexi Loans, last 6 years we've been doing this, and thus as I said, we are now profitable. So we looked at each funnel and tried reducing costs in a manner where we are compliant yet profitable, and so on and so forth. We are growing, but we are not growing at the cost of credit costs, right? Because if you are not lending responsibly, lending is not sustainable.
Right.
So you have to lend, but you have to grow in a sustainable and responsible manner. I think so. That's what the current law states about.
Sure. So when I look at the data, specifically of the Indian fintechs, there are few fintechs who raised a lot, and perhaps they do not need to even borrow for maybe next 1 or 2 years, But there are fintechs who are actually struggling to raise funds. How do you see the current situation, specifically if you look at the funding weather, if you look at the current market, and if you look at the psychology of the investors today? Do you think that we are having the same spirit when it comes to fundraising that we had maybe a year back or 2 years back?
So let me first answer the lending fintech side of things. For lending fintechs, if your cohorts are doing well for 3, 4, 5 years, if you're growing at a certain pace, if you're not growing, then you're not doing the right business. So if you're growing at the right pace and you're able to sustain and show unit economics which are profitable, the demand for capital is always there. Yeah, so we showcase that by raising the funds at the start of this so-called winter, right? In fact, we had a discussion with ET now as well at that point in time, where we said that the whole point was that is there a winter? After that, right in middle of this winter, at least 3 or 4 good lending fintechs have raised funds.
Right.
Yeah. So that's again a testament that if your model is good, if you're scaling profitably, I think so investors will come and give you the funds. Has it changed? Obviously, it has changed significantly. There are fintechs which are getting multipliers of revenues, when it was not a pure platform play, it was effectively a lending play where you were covering the losses as well. So thus there was some froth in the market. Let me put that word.
True.
And as it happens in any down cycle, that froth has gone. But pure lending fintechs or lending first fintechs, I think so were valued in a certain manner. They'll continue to be valued in that manner and more. And I'm sure, again, I've been in investment banking for almost a decade before this, right? So you pick up any large funds, including the BlackRock or State Street, any of these top tier funds in the world, the Capital Group, almost 30% of the funds are invested in financial services.
Right.
So this is a main forte.
Sure. So one more question here, and maybe then I will take last one, is specifically about the whole fintech ecosystem. The whole world is betting really high on the Indian fintechs. But considering the policy makers became really active, considering the rules have been changed, considering whatever the funding winter, and considering that we cannot make money in certain models like payment unless we go to cross border or something like that. How do you see the whole fintech system or segment of India uh, going ahead maybe in next 2 to 3 years?
So we were always of the firm opinion that regulated entities and lending first fintechs will have dominance play in this, because that's the most difficult business to master. But if you're able to master it and scale it sustainably, it's the most profitable business as well. For some of these lending, now I don't know whether it will be Flexi loans or somebody else, but many of us have the capability to create a real impact on the way financial services has been done in this country. So for example, if we were backed by a right amount of capital, can we enter the payments and other ecosystem and create, because that's a low hanging fruit. It's not a very difficult business to acquire. The difficult business is to lend and get your money back, as you rightly pointed out at the start, because it's the business of collections and not business just to lend. So if you are able to master this piece, growing into the other elite businesses, I would say, which is neo banking or payments or ERPs for these MSMEs, etc., will be easier for many of these lending fintechs. And thus, you will see many of these lending fintechs now becoming very big and acquiring market share in not only in the lending business but also in the elite services over a period of time with the right amount of backing of capital, etc.
Oh, sure. And what next for you, Deepak, specifically for Flexi loans going ahead? Because the one immediate target, obviously, when you start working as a fintech company, is the first target is to acquire customers, create a large base, then become profitable. And I mean, again, that's the ideal way. But even before becoming a profitable, they will hit the market and try to raise more funds or look for an IPO. You just said that you are already a profitable company now. So what are your plans? Maybe where do you see yourself maybe in next 2 years? And what are your objectives going to be for next 2 years?
FY25, we are targeting to reach at least 5,000 crores in asset under management. That's one large goal for the company. That can you do that kind of asset base, because that's a critical mass or more than a critical mass required if you were to go public as well.
Right.
Yeah. Because I've been an ECM banker for a long period of time, I know this, that at least 5,000 crores is where your business is sizable enough to be predictable quarterly, right? Because when you go public only when quarter on quarter you can show enough predictability to all the top funds which don't have time as much as the private funders do. They'll spend more time in your company and so on and so forth. The second large goal is the impact we create. Today we are live in say 2,000 odd locations or 2,400 odd locations. From almost 5,000 plus locations we get leads from. We would want to lend to this 5,000. If I were to look at materially, we are making a massive impact only in 500 odd locations. So can we make a massive impact in all 5,000 odd locations? And every small entrepreneur which is deserving and has flows can apply at a few clicks for a working capital loan and get that loan from Flexi loans. Can we become ubiquitous to a lending, or a working capital loan been bought or been required by these people? Can we achieve that? Is the dream and vision for the company, obviously. So scale is there in next 1 year or 2 years. We want to become relevant for, again, we are the only lending fintech which is catering to all the products of working capital. So we have a EMI based loan, we have vendor financing for supply chain, we have dealer financing for supply chain. So we are solving the CFO problems by both vendor and dealer financing. We have the B2B BNPL, where many large platforms want to go direct to retailer. We have the B2B BNPL, and we also offer a line of credit for some of the larger customers. So in the foray of working capital loans, we are offering all the large products. Next 2 years, again, we may launch some secured products as well. We may launch a sachet product or a credit card like product. Again, studying that regulatory space in next 6 to 12 months, we may launch something like that. Also to acquire more and more number of customers. As I said at the start, right, we get million plus customers applying on our website every month, every year, and can you do loans to them? We have till date received more than 8 to 9 million applications, and almost 3.5 million customers. We have a lot of data about. So how can we be relevant for them? How can we solve some problems for them?
Right.
Are things to focus upon as an entrepreneur.
But you want to stick to only entrepreneur SME loans.
Yeah, because it's a massive market. I think so. For next 2 years, we believe that we can create 5 to 10,000 crores of asset only in SME loans, because the market is so huge, and we're still not.
I'm sure, and that's a good clarity to have. That let me grab first this market share which I desire, and maybe we'll think about something later, right? So meaningful thoughts, Deepak, and thanks for sharing all these perspectives with us. Thank you so much for sharing your thoughts at FinTech Diary.
Perfect. Thank you, Amol.
Thank you so much for watching FinTech Diary. Stay tuned to etbfsi.com.